Hey, Dan Passarelli here. Well, there's a couple of stocks that I watch that I actually have in my portfolio that have declined over the past few weeks. And they both basically have a common problem, but the problem is the usual solution doesn't work. So let's look at these two stocks, Amazon and Ford. Now, you wouldn't think that Amazon and Ford have a whole lot in common, but they do. One of the things they have in common is they both own a reasonable amount of RIVN stock. Now, if you look at RIVN stock, and let's just pull that up, and if we look on a little bit of a shorter term time horizon here, we'll just turn that to 3 months. This stock has had a fair amount of volatility from a high of 71 to a low of 29 and kind of everywhere in between. This stock is really volatile, and a big part of that comes from the fact that interest rates are going up, and in a very tech savvy company like RIVN, well, they need low interest rates in order to borrow money in order to grow. Now, because both Ford and Amazon own some of that stock, they took a little bit of a financial hit as a result of it. Now, if we take a look at Ford Motor Company, and this is, again, just a daily candle chart over the last 3 months, if we just simply look at Ford here, we see that, since the end of March, it's kind of had some lower lows and lower highs, a typical example of a downtrend, and kind of came down a little bit the day after earnings, but has recovered some of that. Now, if we look at Amazon, that one really took it on the chin after earnings, although the RIVN scenario wasn't its only problem. But this stock has fallen again since about the same date, March 29th. Now, one thing that I would typically consider doing in order to kind of save myself with scenarios like these is to write covered calls. Writing covered calls is one of the most powerful strategies that I know of. But the problem is, and this is an uncommon problem, both of these stocks are kind of tough for selling covered calls. Why in Amazon? Well, because each one call represents 100 shares of the underlying. 100 shares of Amazon would cost about somewhere around $250,000, which most investors are probably not able to do unless you're a rather large investor or a fund. So we can't use covered calls on Amazon because I don't own 100 shares of that. In the Ford Motor Company, we have kind of a different problem. The stock is so inexpensive that if we look at the price of what some of the calls might be, they're just too cheap. Our commissions end up taking up a fair amount of that, and we just can't sell a strike high enough to give it enough room to pop higher. Now, if covered calls is something new for you, or if it's something that you do all the time but want to get better at it, I actually have a webinar coming up that I'd like to invite you to attend. All you have to do is register at the page that pops up right after this video. This is Dan Passarelli, Trade Smart, and I'll see you on the webinar.